I'm a builder of an exchange. We have two businesses. One is a institutional exchange. That's the first business that we built back in 2019. An institutional wants to trade 100 Bitcoin, 200 Bitcoin, etc. There was no way for an institution to get the liquidity that they wanted in that size with immediacy. There was literally 10 people in a Telegram pit back then. These were the institutional guys. And whenever they needed liquidity, they would ping this Telegram chat. So I asked him casually, I was like, when you need to get out of something, a position, how do you get out? I just ping the group. And then if there's interest on the other side, they respond, and then we agree, and they put a price on the order book, and then I transact. Is there no tool for you to basically just do this, in an automated way? And he said no. And so I said, you know what? How about we build a tool for this thing? And so that was basically the genesis of how Paradigm began. The business is fantastic. It's still a great business today, but we have this dependency on the exchanges. We don't have control over the settlement layer because the exchange controls that. So then we decided that, hey, you know what? We should actually be looking at building our own exchange. That was how Paradex began. And then FTX happened. That was obviously a massive catalyst, which was we lost money. So my PA went to zero. A bunch of, the founding members of our team all have lost money, some of whom which you know. It was survival mode. How do we make sure that we survive until the market comes back? Figuring out what pieces of the business do we focus on? Ultimately, we decided that we should not stop building Paradex.
Hey, When Shift Happens family. Welcome to Drops, a podcast series where we showcase smaller, rising star projects in the crypto space. Since When Shift Happens started to take off, we've received hundreds of requests from many great projects every month that we had to say no to because they weren't a good fit yet in terms of size and impact. But this has now changed with the Drops podcast series. We're building When Shift Happens, the most credible platform in crypto, and there is no reason why smaller projects with big potential shouldn't have a chance to be heard. Drops is not a research service nor an endorsement, but a way to give a voice to the potential big crypto founders of tomorrow. Which is why we're here today, trying to find some serious people in this industry, serious projects. Anand, if you had to explain what it is you do and why you do it to someone who doesn't invest, doesn't trade, and is kind of scared about this complex and opaque world of finance, what would you say?
So first and foremost, I am a builder of an exchange, right? So we have two businesses. One is a institutional exchange. That's the first business that we built back in 2019. And the focus was to very solely target large institutional traders that want to trade options. And these folks were trading on Deribit. They were trading with Deribit, by the way, if the folks that don't know, it's a large options exchange. It's the largest options exchange in crypto. But Deribit was, whenever institutions wanted to trade on Deribit, institutions tend to want to trade in large size, right? Like an average retail user trades maybe, a Bitcoin, 2, 3, 5, 10 Bitcoin max. An institutional wants to trade 100 Bitcoin, 200 Bitcoin, etc. There is no way for an institution to get the liquidity that they wanted in that size with immediacy, right? So that means right now. So I want 100 Bitcoin and I want it now. I don't want to wait. I don't want to put my order in the order book and broadcast it to everyone in the world. I want it now. And so what I developed, I just was lucky to be one of the first people. There was literally 10 people in a Telegram pit back then where they were trading on Deribit. These were the institutional guys. And whenever they needed liquidity, they would ping this Telegram chat and say, hey, I'm looking for 100 Bitcoin in liquidity. And one of my close friends happened to be one of the main market makers back then on Deribit. And he told me about this pit. He's like, so I asked him casually, I was like, when you need to get out of something, a position, how do you get out? And so he's like, I have this group. I just ping the group. And then if there's interest on the other side, they respond, and then we agree, and they put a price on the order book, and then I transact. And I'm like, wow, that's crazy to me because you have to manually negotiate something over chat and then put it on the order book. Is there no tool for you to basically just do this, in an automated way? And he said, no, there isn't. And my background prior to that was institutional trading. Very much this RFQ, OTC kind of format where large institutions are buying and selling on these platforms. I myself was one of them. And so I said, you know what, how about we build a tool for this thing? And that's basically, how I got my start in crypto is we happened to find this niche of institutions that had this need of trading maximum size with immediacy, like now. and they didn't want to go to the order book, right? Because it's privacy. There's people can front run you, etc. And so that was basically the genesis of how Paradigm began. We built this tool. Very quickly, we became a very large percentage of Deribit, and so today we are about 35% of Deribit, which is roughly about $1 billion to $1.5 billion a day. We have about 3,000 institutions on the platform. 500 of them are active every day. At this point, we are the largest institutional network in crypto. So the best way to kind of describe this to a normie is, think of us as an institutional exchange focused on options, right? And we basically made it very easy for institutions to trade, options back and forth without incurring, too much slippage and et cetera. It just made the process, very much more efficient than going directly to the order book, right? So that's the main business. That's how I got my start. In the course of building this 2 or 3 years ago, we ran into, so one thing we realized is like, hey, we have, this is all great. The business is fantastic. It's still a great business today, but we have this like dependency on the exchanges, right? Which is if we want to change something in the, as institutions are being, matched to buy and sell, we don't have control over the settlement layer because the exchange controls that. And that basically slowed down how fast we could innovate. Like with the exchange, the users, institutions are using our product, they face us, et cetera. But, we can't make changes to the product fast enough. And so we realized very quickly that this dependency is like slowing us down. So then we decided that, hey, you know what? We should actually be looking at building our own exchange, but building one on chain because, like I said, I think we were talking about it in our last call. We were in, I got into crypto for, philosophical reasons, in the sense that, I believe self-custody is a right. Because I worked for a bank for many years and it just felt very like extractive and the intermediaries were able to extract a lot of, value and it just didn't feel right. And so I felt, this is like an opportunity for us to kind of rebuild those rails, right? So when we decided to build an exchange, we were like, okay, this needs to be on chain. It cannot be just another exchange. And so that was how Paradex began, right? Or at least that was the original idea for Paradex. Just around and after we decided that, hey, we wanted to do this, FTX happened, right? Which was...
So it was... Okay, so it was after. Okay.
Yeah, it was just after where we had already decided we wanted to go down this path. But nothing had been done yet. We were still looking around for the tech and doing the research, et cetera. Nothing was like set in stone also where we were building, et cetera. And then FTX happened. And that was obviously a massive catalyst, right? Which was we lost money. So my PA went to zero. A bunch of, the founding members of our team all have lost money, some of whom which our business lost money because we had cash parked at FTX. They were our lead investor. And we had a big business with them. Our futures business with them was doing 500 million a day, fastest business I've ever built. We went from 0 to 500 million a day in 70 days, just record time. Very successful business and overnight gone, right? And the worst part about it is like, okay, we lost money, I lost money, the company lost money, but almost 7 out of our 10 top clients went bankrupt overnight.
What do you do when something like that happens and it impacts that much? Like personally, business-wise, client-wise, investor-wise?
I mean, our whole world was basically flipped on its head, right? Overnight. So we went into, it was survival mode. It was figuring out, forget everything else. We were like, okay, how do we make sure that we survive until the market comes back, right? It was a lot of pain. It was, cutting jobs, cutting layoffs, et cetera. And also figuring out what pieces of the business do we focus on. And we had this bet, which is Paradex. And so we had this thing, we have an existing business Paradigm, which is, 90% of our volumes are down because, our big clients have died. And we have the second thing that we think is our future, Paradex. Should we keep investing in this thing? And so it was a very hard decision. What should we do? Ultimately, we decided that no matter what, we should not stop building Paradex because if we do, whenever the market comes back in the future, we don't want to start building then because you would already be too late. I think you just talked about trends, right? So yeah, it was hard times. It was, and then of course it wasn't just that, right? After FTX happened, as you know, of course, a bunch of people, went bankrupt, but the market kind of died, not just in terms of, people initially, but also volatility. And as a trading business, if volatility dies, you have no business, right? Because the market doesn't move, there's nothing to trade, and there's nothing to trade, nobody can make profits, and there's no profits, there's no volume. So you have this kind of like cycle. And so in Q3 2023, it was, I would characterize that as being our worst period because, the initial aftermath of FTX, we survived, it was fine. Q3, that's when I was really worried because I'm like, okay, the volatility has died now. Credit is not available because credit markets all obviously went to zero. Nobody was lending.
That's almost a year after FTX.
It's almost a year after FTX.
You have this time-based capitulation where it basically feels like
it's just like a grind, lower and lower and lower. And it, to me, that felt more dangerous than the actual, FTX thing, right? And then you had just oddball things like SVB going under and 60% of our treasury being based there. I get a call from my, my co-founder.
You had 60% of your treasury in Silicon Valley Bank.
60% of our cash was over there, right? At a time when it was already pretty bad for us.
So, and you had treasury also at FTX, I guess.
Yeah, but that wasn't too much.
Okay, because it's crypto, right? But then you have oh my God.
It was, this was like, I need to pay salaries from this, right? So we're like figuring out like, what is the future of the business? And then the reserve that we have, which is to pay salaries and stuff. I get a call from my co-founder. I'm in India. My parents are sick. I'm in the hospital, literally. I get a call from my co-founder and she's like, hey, by the way, just so you know, SVB just is going under. I'm like, what do you mean it's going under? It's a $400 billion bank. What do you mean it's going under? And she's like, they just announced it. And it was a Friday evening.
Yeah, I remember.
And I'm like, holy shit, like, what do we do? So also just like weird, kind of like stories from that. So this happened. First, her and I decided, you know what, let's just move whatever money we have in our other banks because we had like separated our money. Because being in crypto, you need to have multiple banks, right? Just to make sure you don't get debanked. So I said, okay, remove money from the other banks because we don't know whether they are going under and put it into stables.
But stables had also gone down 15%.
So we made
the
this,
USDC, right?
Exactly. So we made this decision, and just like after, this was like late in the night, and I'm like, then I started looking on Twitter, and I'm like, holy shit, why is USDC like depegging?
Yeah.
And then I'm like, holy shit, they have exposed. So again, call her back. I said, hey, don't do anything. Just leave it where it is because USDC has its own risk. So yeah, it was.
That's when Bitcoin went from 17 to 25K overnight, right?
Yeah.
It was the beginning of the bull market, basically. This
correct.
This exact event, because it was basically proving that most of the institutions were underwater, and therefore either the Fed would have to lower rates to help them not die, or to keep printing money, which in both cases was positive for
Bitcoin. Yeah. Like I'm not sure how much of it caused that rally, but I think, it was exactly around that time, right? And the thing that's really saved, I think, not just us, but the rest of crypto, I bet there were a bunch of companies like us at that time, was really like this ETF rumors, right? Because the ETF rumors back then were like, okay, an ETF is coming. And had it not been for that, I think it would have been extremely challenging, not just for us, but any company out there. So yeah, it's been an interesting last 3 years post FTX.
What happened in your life before that you think helped you navigate this endless nightmare that was the November 2022 to about a year later?
What have I done? So one, I grew up in India, right? I think there's a fluidity that every person there has in their personality that without it, you cannot survive there in a daily world, in a daily, like a daily kind of way. And I think if, because you can take nothing for granted, you can't trust anything. So you're constantly like on the lookout. It's like crossing the road there is like, it's like a threat if you're not paying attention properly. So I think that's number one. And I think most Indians, especially, folks that kind of go overseas, they have this kind of fluidity to their personality. I think that's number one. That really helped me. The other thing, which I give a lot of credit for to, is my parents, my dad is also an entrepreneur, and he went through some hard times when our factory had a strike, and we basically, there's a bunch of things like it was a labor union kind of like revolting against management, etc. And I saw him go. I lived through that, and I saw how he went through that, and I mean that was maybe what he went through is probably like 100x than what I went through. Of course, our situation was bad, but nothing close to what he went through. And I think that gave me a lot of strength internally, because I had kind of like not been through it before, but I'd seen it before. And I saw how he went through it and ultimately overcame it, and not just overcame it in a survival way, but thrived after that. I think that was that had a lot to play in it. And I think just my dad and his personality, I think, has a lot to do with how I decided to take the plunge. It's like things are not as fearful. I don't have this like fear mechanism of risk, like this, like how people perceive risk. I don't have that in me. I just view things as like differently, right? And so when something bad happens, I'm not viewing it in terms of like, oh, how bad is, like, I'm not viewing it in the traditional sense. It's just something I have to overcome. And so I think that mindset allows me to go through things, and I think in a different way. It just builds a certain resilience, right? I think that's probably the best way to put it. It builds resilience in a way that others either don't have or haven't acquired it yet, if that makes sense.
So when your friend tells you, hey, there's this Telegram group chat with 10 people, there's no solution out there, you didn't think much before going and building? Because usually people think, oh, when I take the leap, this is like a big thing, I need to think about it.
Yeah, no, it's so it's funny. So backstory for that. Yeah, so to answer the short answer to your question is, to me, it was right away when like that happened. I still remember the conversation was in a cafe in Hayes Valley in San Francisco. I had met him, and he was like, "Hey, I'm doing this thing," and he like showed it to me, and I'm like, "How are you trading?" And he's like, "Oh, this is how I do it." And I'm like, "That's insane! You don't have a platform?" And so then I showed him what I was building, and the first thing both of us was like, "Well, hey, you should do this for Deribit." But right away, to me, the first things that jumped out of that conversation was I could either build Paradigm for what I want, what the initial idea was, because, like I said, I was from TradFi, I was trading commodities, and I wanted to build a platform that automated commodities trading, OTC. That was basically the original idea. I was speaking to investors to basically fund that idea. But when this happened, it was this fortuitous event where, to me, it was like, no, this is the reason, this is what you're really building, right? So I would, there wasn't like, should I do this? Of course, there was once I knew that, then was like, okay, now I need to tell my investors I'm changing course. And a lot of them had signed up because, they understood commodities, because I was raising money from people I worked with and traded with. And a lot of them were like very against crypto. I'm talking about 2017, 18. It wasn't, crypto wasn't mainstream like it is accepted today. A lot of them gave me pushback that, hey, this is a scam, etc. But the conviction was there day one that this is what I wanted to build. So yeah, I didn't really go through that. Should I do this? Should I not?
How happy are these people today?
I mean, let's put it this way. From time to time, I like poke them in the chat, as every time Bitcoin goes above a certain price, or, when we raised our big Series A, et cetera. Like this, these are people I consider like friends and family. It's like 22 angels that back me. They're all part of this SPV. And a good portion of them, were skeptical, but I think they believed in me. And now I have the pleasure of poking them back, and I'm like, hey, Andy, what about when you said this was going to zero? It's just, so yeah, I mean, are they happy? Yeah, absolutely. But I think they're more happy about the fact that they bet on me, and, we kind of won together. I think that like, I'm sure that I know this for a fact.
You're the co-founder and CEO of Paradigm, or solo founder?
Yes. So yeah, I have a co-founder, Mickey. She joined, a few months after, but yes, we co-founder.
Explain to me what Paradigm is, knowing that I don't have any background in finance.
So yeah, so as I was saying earlier, Paradigm is an institutional platform to trade options. If you're an institution looking to trade large size, Paradigm is the place to do it.
What if I don't know what an option is?
Then you probably won't use Paradigm because 90% of our volumes are large institutions, right? An easier way to explain it to a retail user is think of us as like the wholesale market for trading, right? Big size, sophisticated traders, etc. Whether you're buying apples, whether you're buying whatever it is you're buying, it's the B2B market. It is not a B2C market. You can think of it like that.
Why do people or institutions trade options?
Why do people trade options? To make money, in short. But options give you, futures give you a linear payoff to trade, right? So it's like linear price exposure, but with leverage. That is futures. Options give you a convex payoff, which is, if it goes up, so you have this accelerated payoff almost, and then you have this like asymmetry because, if it goes up, I get paid. If it goes down, I don't have to worry, right? So it has leverage, plus it has insurance baked into the product itself.
Yeah.
And I think, different investors, different traders tend to want to trade different things based on their personality, their strategy, etc. Some people like just the linear leverage payoffs of futures. Some people like options and convexity.
Can you give me some key numbers about Paradigm today?
Yeah, so Paradigm today, we do about $1.5 billion per day on any given day. We've gone as high as 5 billion, so we've seen some crazy days. But on average, we do about $1.5 billion. We're about 35% of Deribit on any given day. So we are a very large percentage of the institutional market trades through us. And we have about 3,000 institutions onboarded on the platform, and about 500 of them are active on any given day.
You mentioned before the FTX moment, right?
Mm-hmm.
You're 40 years old, you run a mega successful institutional business, you're building a family, but you're not stopping here. Why?
I think, the short answer is I feel like my journey is not done, right? Like even when I started Paradigm, it was, I see myself as someone that has a calling, right? And the path to fulfilling that calling initially when I started was Paradigm. Paradigm is now kind of grown up and, it has a very important piece in the market. But has it had the impact that I think I was initially called to do or build? The answer is no. And so Paradex is the platform that allows for us to be able to kind of express ourselves more freely, to be able to build without constraint, but build without compromise in a way in which it can touch every single person in the world. And until that calling is fulfilled, or I'm called not to do that anymore, I will continue building. And that's always been the driving mission for me personally. And I'm just lucky to be blessed to be someone that has this intersection of my calling also has the ability to affect other people. And I think this to me is it's something it's what keeps me going, basically, right? I get out of bed every day for this thing. And so like Paradigm, I would say, is step one, or is a stepping stone to ultimately be able to paint on a canvas where I'm not restricted, right? And I think that's the primary motivation for why we keep going.
It was a perfect first step into crypto, but by building something that's closer to what you were doing before.
Correct.
And now what's the next step? It's using the power of decentralized finance.
Yep.
That is potentially much more powerful. Absolutely. One of the reasons we're here today is Paradex, obviously. What is Paradex? Explain simply, no jargon.
Paradex is a decentralized exchange. Very simply, if in crypto, if you want to trade spot, if you want to trade futures, if you want to trade options, Paradex is the one-stop shop for it. I call it the everything app for crypto. Simply.
How do you explain a decentralized exchange to your mom?
I don't. To be honest, the decentralized piece doesn't really matter to the average normie. What I tell my mom is I'm building an exchange. I'm building a marketplace. It's a marketplace where you can buy or sell any financial product that you want, and you don't have to compromise. You don't have to worry about something not being available. Think about it as the everything store for finance or financial products. That is, that's actually how I've explained it to my mom. It is a marketplace for financial products. As simple as that.
Never trust an exchange again?
Never again.
If your mom comes and asks why should she never trust an exchange again, but you're building an exchange, what would you say?
I would say don't trust an exchange where you have no control over your assets. I would preface that statement with, or qualify the statement with this additional qualification, right?
What does having control over your asset mean concretely?
Being able to withdraw or deposit without fear of censorship, in the sense of, deposit a centralized exchange, for example, like Binance can, stop or pause withdrawals at a given point in time. They can freeze your funds. I think that is a universal right. Self-custody to me of your own assets is a universal right, just like privacy is. And those are the two principles of the exchange, that any person in the world should be able to access financial products without permissionlessly. That's number one. And two, without fear of censorship. Because once you invest, nobody should be able to take it from you and say, guess what? This is not yours anymore. I'm going to freeze it for X days until I do some investigation. I think that's overreach to me, right? Yeah.
There are huge exchanges today. Binance, Bybit. Actually recorded the Bybit episode with Ben. This table.
Nice.
Also, a month ago.
Very close friend of mine. So yeah, know him well.
It feels like a long time ago, but it was just a few months ago, 2 or 3 days after the hack.
Oh, wow. Yeah.
They are huge. You said the other day, to beat an exchange, you can't just be better, you have to be 10 times better. What exactly do you believe Paradex hits that 10x mark today?
Yeah. So to me, the framework is really this framework of switching cost, right? And the 10x really comes from there. We believe that for any user to switch what they're doing today, what they're using today, and use something that you've built, the experience needs to be at a minimum 10x better. If it's more, great. But if it's not at least 10x better, we should not be building it. That's the anchoring principle. And so when we're competing against centralized exchanges, and I think this is also something crypto Twitter kind of gets all twisted sometimes. It's like, how do you compete with Hyperliquid? How do we compete with We don't. We're competing with the centralized exchanges because Hyperliquid has 30, 40, 50,000 daily active users. That's a very small pie. You shouldn't want to compete for such a small piece of the pie. Centralized exchanges have hundreds of millions of users. That is the pie. And there's anyways this trend of this migration, the great migration from SEX to DEX, right? Which is, again, I think it's not just me. A lot of people post FTX, they don't want to trust centralized exchanges anymore. There's regulatory, hurdles. There's all these onboarding, all this onboarding friction. So this migration is already underway. So our positioning is, how do we position to make sure that these users come to you? And in that sense, we are aligned with other DEXs. To me, all the DEXs should be working together to help with the migration, and then we can figure out how to divvy up the pie amongst ourselves. So I don't think I've ever thought about, hey, Hyperliquid is a competitor. To me, it's just we're kind of both positioned together, as these people are migrating away from a centralized exchange. To the question about how we compete, an exchange at its core sells liquidity. If that is not good, you cannot do anything else. You cannot build any platforms, any products on top of that. So for us, it was a matter is, how do we make sure we have or build a model that has at least 10x better liquidity, or at least has the potential to get 10x better liquidity without having to bootstrap 10 years of user acquisition, which all these centralized exchanges have. So the answer was innovation. You couldn't just leapfrog them overnight with 2,000 daily active users. What we've done is through innovation like RPI, there's a particular type of order called retail price improvement orders. Our liquidity today is actually better than Binance. On 100K orders, or even on larger orders, we're actually better than Binance.
What does that mean concretely? Better liquidity for someone who is coming to buy or trade.
So let's say you have a 100K order. If you went to Binance, the spread on the order book would be, let's say, 1 basis point or 2 basis points, something like that. You come to Paradex, it will be half a basis point or basically 0 basis points. So basically meaning like super tight, right? And so you're saving 1 bip right away by transacting on the DEX. So gone are the days, hence the better than sex era, or that's kind of the tagline, is we have a platform and a model now that as more users come, our liquidity is going to only improve. If it's already better than a sex with 2,000 daily active users, what happens when we do to 30,000, 100,000, 200,000? So the model scales kind of really nicely, and we can now outshine the DEXs, the centralized exchanges, very easily. So just on liquidity, we need to be better, and we needed to figure out, how to do that. So we figured that part out now. But I don't think it's just a matter of doing better on existing metrics. I also believe you need to offer something fundamentally new to the user and exciting. Otherwise, the switching costs become more expensive for the user, right? If you're not giving me that much better, even if it's 10x better, maybe it's just too much of a hassle. My workflows are here, it's all connected. I'm just used to this, right? So for us, that means new products. And what we've built is what we think is, DeFi has been kind of missing innovation for a long time. And our answer to that was perpetual options. The perpetual options are basically what perpetual futures did to futures. Perpetual options are to options. Think of a daily option that doesn't expire. So you get all the benefits of an option without the hassle of closing your position or like it being closed out and you having to roll to the next position. And all you do for this optionality is you pay a little bit extra in funding, right? So this combination of 10x better liquidity and just doing, providing at least a minimum of 10x better experience on existing things that they already get at a SEX, liquidity being, number one, privacy is another one. I think most DEXs today do not value privacy as much. I think just like self-custody, I believe privacy is a universal right. We are better on liquidity, we have privacy, and we have new products that users can get that they cannot get at a centralized exchange. I think the combination of these three things is what I think ushers in or powers this like better than sex era, right? Gone are the days where users have to compromise on liquidity, compromise on new products, compromise on margin, compromise on capital efficiency. You don't need to do that anymore.
I just want to talk about the perpetual options a bit more. You mentioned the other day, because it's try to simplify maximum, right? Why would someone use this product instead of perpetual contract? And one thing you told me the other day is instead of being liquidated, because the funding fee is higher, instead of being liquidated, and it's an option, right?
Yep.
So basically the liquidation is in time and not
price.
Price.
Yep.
So you're basically avoiding the price liquidation, but you have a time liquidation if you don't top up your account.
Correct.
Provided you're negative on your position.
Correct. Yep. So this...
Who does that make sense for?
Okay, so great question. There is a subsection of leverage traders or subset of leverage traders that want the leverage, but don't want to deal with just liquidations, especially when things get crazy, when the volatility gets really high. And they are willing to pay for it. The same way, if you're driving a car, if you're doing something, you just don't want to deal with the hassle. So you buy insurance on it, right? Right now, it's you're like mandated by law to do it. That's a separate thing. But if you were given the option of, hey, you want the leverage, great, keep it. But how about I take away this like liquidation risk, from you in exchange for a fee? There is a section of, a subset of traders that wants to do that. How do I know this? look at the massive 60% of zero DT, options in TradFi on the S&P are retail. So retail is very used to paying premium and receiving premium. So we know this market exists. Perpetual futures are such a super product that they basically sucked in all the demand for this like leverage plus, everybody that would have traded an option basically is now trading this thing because it's so liquid, it's so easy to get into. But the other thing that I think most people kind of misunderstand, and this is actually one of the reasons I think options has not done well in crypto, or at least not as well as crypto. Obviously, Deribit is multi-billion-dollar business. It's very, very big. We are doing multiple billions a day. So it's not small, but it's not as big as 500 billion a day, the crazy volumes you see in perps. The answer is volatility. I think because crypto is so volatile, the implied volatility of the option is very high. And that means that the options are expensive. So to a normie, I go long perpetual futures, I pay 1 bip in funding, right? It's nothing. It's 10, 11, 20, 12% a year. It's nothing. If I convert that into, let's say a year ago or 2 years ago, when Bitcoin IV was very high, right? If I convert that in premium terms, I would be paying 20 bips, 30 bips, 40 bips every 8 hours. Now, should I just go YOLO and, pay 10 bips, 1 bip or 10% a year? Or do I pay 60% a year? I'd rather just be like, no, I'll just risk it. Like, it's so cheap that it doesn't matter to me, right? And so I think this is the underappreciated point. Like, because IV was so high, options were expensive. And because options were expensive, normies didn't want to trade them. It's just your dollar value utility kind of goes down, right? But now, as Bitcoin's IV has basically gone down, we've seen days when Bitcoin vol is, in the 20s, in the 30s, it's gone as low as 19. I think that was the Q3 2023 when I was talking about. Now I think is the moment where options will shine as this asset becomes cheaper. Your utility of, I will give you a simple example. If you were paying 1 bip in funding and on futures and getting leverage, and I say to you, hey, you pay 3 bips in funding and you get leverage plus insurance, you would probably take it because it's marginal for you.
I think the problem with option is always been kind of hard to understand for retail, even for me, to be honest. You have to kind of, and then you have to go to this platform. Even Deribit was, last time I used it was probably 2 years ago, but I was like, this is weird. I don't really understand. People much better than me will get a better price because they get in earlier. I don't understand this thing, right? Whereas perpetual futures, you just go click, done, right?
Boom, so right. That's a fantastic point, right?
It's probably much, I think for the normal people like me, it's probably much less about the cost, that you would think less about the cost than about, do I even understand this thing? So how easy is it to use?
Fantastic point. So it's not just cost, right? It's the cost piece is the underappreciated part of why options didn't do well. And we happen to have this insight because options is what we live, we breathe, we eat options, right? And that's when we realized that people don't really talk about this thing. They talk about how hard options are. You go to Deribit, you see this wall of numbers. It's difficult for a retail user, right? It's catered towards an institutional product. It's no surprise that we do 90% of our volumes are institutional because they understand it. But yes, the UX of it is very hard. So you have this wall of numbers. There's no chart. That's the biggest, again, people don't talk about it. There's no chart. You go to trade Bitcoin, what's the first thing you see on a perpetuals page? You see a chart.
Absolutely.
And you see a chart and then you're like, okay, up or down, right? You go to an options thing, there's no chart.
You see just
you just see numbers, right? And it's very hard to comprehend that. And so that piece is, but I feel like that piece is more appreciated, right? But if you combine that with the cost piece, then yes, it just made it like completely not tradable for a retail person. So what we've done with perpetual options, and if you go, trade it on Paradex today, the first thing you see when you come there, it looks no different than a perpetual future. You see a chart, you see an order book, and you see a funding rate. And you just now see a higher funding rate. And so you see futures funding is 1 bip, options funding is 3 bips. So now for 2 bips extra, I don't have to worry about liquidation. Absolutely. So I think this is an important piece.
how hard is that to replicate by a competitor?
It is.
If you have to be brutally honest
Yeah.
with yourself.
Look, ultimately, everything can be copied, right? Look at LLMs. All this innovation OpenAI had, this edge it had, how quickly that eroded. Grok is now many orders. They just released a model yesterday. OpenAI, it was like 10th or 15th on the list, and Grok is killing it, right? So ultimately, everything is copied. I'm not naive to think that this won't be copied. But there is a window in time, at least in the beginning, when you're bootstrapping something, where you have the advantage of experiential learning, where unless you actually understand the ins and outs, and again, just to kind of shift gears a little bit, one of the things I really like about perpetual options, other than all these things that I talked about, is as an exchange, we've had to abstract away all the hard pieces how did we take a dated instrument, which is like has expiries on every given day, and made it perpetual, right? In the course of doing that, we had to basically over 12 to 15 months, me and my team sat down and we literally went through all the hard pieces of, well, we need to smooth this and we can't do this anymore. We need to discard this thing. That is going to take, unless you know what you're doing and you already have the experience of this, I think. So there is a period. So again, to finish my point, the main was that perpetual options abstracts away all this convexity of delta, vega, gamma, all the things you talked about, these numbers, and it makes a product available to you where you just click long and sell short and you're good and you just pay extra in funding. But all this complexity that's abstracted away, we're dealing with that. And that complexity, unless you're doing it yourself, it's going to be hard for you to figure out what you need to fix. But eventually, I think, like I said, once this thing is out, people will eventually figure this thing out, right? And they'll copy it.
So the bet is get the users, get them used to the platform, and then a competitor needs to come with 10x improvement.
Yep. The network effect, right? So one of the nice things about marketplaces is the first scalar advantage is once you scale a particular product, the network effects are so deep, it becomes very hard to kind of yank those users out. Unless, like you said, you have a 10x better. So there should be a 10x better reason why you want to move, right? So it applies back to us as well.
You were gaming a lot when you were younger?
Yes.
I think one of the games you're professional at was called Counter-Strike.
Yep.
If Paradex was a player character in a game of Counter-Strike, what would its 3 special abilities be? And what is one of its fatal weakness?
So I liken more, to make the analogy kind of simpler, I think I liken Paradex as the team, Paradigm as the team, more like a particular team in CS. Because, so the team that I'm comparing it to is FaZe. I don't know if the listeners know FaZe. Those that know, I'm a big fan. The thing I like about them is they play Counter-Strike and they give it their all, right? It's a team that is not afraid, and it's the most exciting team to watch. They're not afraid to take risks. They give it their all, and they have a community behind them that no matter, it's like painful to be a FaZe fan, because when the highs are high, it's amazing. When the lows are low, it's bad. Now, ignoring, that lows aspect of it, what I really like about them and what I think is I see similar in like our team is that we give it our all and we're not afraid to take risks, right? And so that is the analogy I would say comes to mind, kind of the strongest. And also, if you think about Counter-Strike, for example, one of the reasons, I used to be a professional gamer. We were the best in India. Then I had to stop because it didn't really have a future in India back then. I'm talking about early 2000s. And I had to decide, it's like, what should I do with my career now, et cetera. I had to work. And I decided to go get an MBA in the US. And I went there, got an MBA, started in operations, moved to finance because finance excited me more than ops. Eventually did a MS in financial engineering. But I remember one day when they basically, they have these tours where they take you to a company. So they took us to the trading floor at a bank. And I walked onto the trading floor, and I kid you not, the first feeling I got was, holy shit, or the first thought in my head was just looking at everyone yelling and screaming and just the activity. I looked at it and I was like, wow, this is no different than a LAN parlor, like a LAN cafe. There's the cafes that I grew up playing Counter-Strike. There's a bunch of teams, playing and just all this excitement. And it just seemed like this like multiplayer game that is like constantly shifting and changing with screens and numbers, etc. And I was hooked. To me, I was like, this is what I want to do, right? I don't know what this is at that time, but whatever this thing is, I want to do this thing, right? So the game of Counter-Strike to me, the chaos, the fast-paced the team-based aspect of it, the fast-paced aspect, the quick-second decision, making, has a lot of analogy to like trading or when I started trading. And so all of that, I would say that, the spirit of that is already kind of in the path that we've chosen to build, because to me, in some sense, the spirit of these two worlds is not very different. It's just like, sub-second, quick decision-making, team-based. So a lot of this like in the trenches feeling together with your buddies or your teammates or your whoever you're working with. I think there's this like really nice analogy. And so, I'm lucky that I get to live that every day, but building, a platform, right? And in finance, which again is just this very exciting thing that's like constantly moving.
Give me a weakness.
What is our weakness? Sometimes I feel like we try to move too fast. And, especially because, the feeling is more pronounced now, because when you are building, with Paradigm, I didn't really have this feeling because we were the first. We were the first to build the platform. Nothing like us existed. We got to define the market. And people came to us because it was such a big need to trade on this platform. There was in the first 2 years, we didn't have a salesperson. It was me and my co-founder. We were 4 people in the company and a couple of devs, right? In the first couple of years. That's how fast that business kind of grew, because we had to do no sales. In a platform like Paradex, when you are the 100th exchange, maybe like 500th exchange, there's so many exchanges these days, in the market, you're coming from behind. And so there's this need to constantly iterate to find product market fit. But sometimes I feel like our weakness in the course of this iteration, and it's hard, right? It's not like there's nobody tells you like, this is the path of iteration. There's always this experimentation that you constantly have to do. I feel like we try to move too fast sometimes, right? And because so I have that personality bias, this bias to action. Like I'm always biased to doing things quickly. But the other people that basically work here have this bias. Like they like this urgency. They like to move fast. That's our culture, right? It's not for everybody. That's another thing. But the kind of downside to that is everybody wants to move fast. And so that kind of like we trick ourselves sometimes into moving too fast, and then we have to slow things down and be like, okay, no, let's pause things down. So I would say that is our weakness, is that sometimes we basically bias towards moving too quickly, and then we have to like slow things down, and then, but I'd rather do it this way, quite honestly, because even if we're doing things fast, we get signal faster, and we're able to basically like, iterate, based on that. So even if it's a signal of, hey, this is the wrong path, at least I have a signal.
You've been a raver for 20 plus years. I've been too, but not 20 years. You used to be a DJ. You've seen culture move. Why do you think crypto is about to go mainstream the same way gaming and electronic music did?
Yeah, I think why?
Why now?
Why? I think they're two separate questions, but like, or maybe why now is kind of a combination of that as well. But crypto fundamentally has brought something new to the world. And the thing about fringe culture, whether it's electronic music, whether it's, festivals, whether it's, drugs, whether it's whatever, it's something new to the world that you cannot access in the mainstream, that once you access it, gives you an outlet in a certain way, allows you to be a certain way, either in a person, from a personality perspective, allows you to express yourself either in an artistic perspective or as a builder perspective. It gives you something new. And I think once something like that appears on the scene, it has this kind of gravity around it. And as more and more sort of people kind of build, there's kind of a network effect to that as well. As more and more people are attracted towards that thing, the black hole that it is starts to become bigger and bigger and bigger and bigger, right? Earlier states, it's slower to develop, but once it kind of gets to a particular place, it's inescapable. You cannot escape its gravity. And I think crypto in the last, let's say 3 years, 2 to 3 years, especially post FTX, I think we've kind of eclipsed that boundary where you now have escape velocity, where it now offers a new way of being to people in the world, not just in terms of a new way to transact, but a new way. Crypto culture, I think, will soon be mainstream culture. The way we talk, the way we are, the way we dress, those things which are now fringe, I think will soon become mainstream. And so just like, and I've seen this with electronic music, I've seen this with music in general, I've seen this with, drugs, I've seen this with, and now, finally this new trend, this technological trend, which is crypto. And just the power of it is so transformative. Music is transformative, 100%, no question about it. Drugs, depending on who you ask, is transformative. Gaming, same thing, is transformative. But I think crypto has this it's like all of those things combined can be in crypto. So the power of it, I think, is much, much more than anything else, at least that I've been a part of. And it has a lot of similarities with the trends that I've seen that have ultimately become mainstream, that to me, it's like, this is taken off. It's just a matter of okay, I just got to ride the wave. It's just be on the wave, fucking ride it. I think so that's the similarities, that's how I see it.
Makes a lot of sense, actually. Crypto enables people who want to live on chain or don't have bank account anymore.
Yep.
Control your own money, obviously separation of state and money, but also opens up so many opportunities to the content creator, build businesses.
And in your way, right? In
Absolutely.
your way.
You do whatever the fuck you want.
You do whatever the fuck. There's no judging.
It's basically a mix of, it's basically internet.
It's the internet like it was supposed to be. That's the best description I've seen it. It's the internet like it was supposed to be, free of intermediaries, where you can just you say and be whoever you fucking want, right? I mean, it also invites scams. That's the downside of it. So we still have to figure out, it's still the wide Wild West in that sense. We still need to figure out self-regulation and whatnot.
If you had to compare the internet, what it was supposed to be, right, crypto, with a city, what would you say? Because I was thinking right now about this. I mean, I lived in London for a couple of years. It's not particularly a place where I would love to live forever. I don't like it that much. But if you look at the variety of people and the freedom of expression, they just dress however the fuck they don't care, all that stuff. I was thinking maybe London would be the city that represents crypto.
Yeah. So you're saying, how do you see it as a city?
If you were, for someone who still doesn't understand, the crypto is the internet as it should be, maybe you could say, look, if you go to London, you're going to see people from everywhere. They dress however the fuck they want. They don't care what other people think. Yeah. If they want to sing in the street, they sing in the street to try to make money. Like right? You can do anything. There's opportunity.
The way I would actually I've thought about this a lot. It's something I think about it constantly, not just philosophically, but also in the context of infrastructure. The way I would simply describe it is, I think Balaji has this idea of network states, right? To me, crypto is, a bunch of network states together, right? Just to have this intermingling of these, hundreds of thousands of millions of communities, all of whom have coalesced around a particular set of beliefs or ideals, depending upon the chain loyalty you have or a project loyalty you have or whatever. And crypto in general is the kind of the mixture or this melting pot of all these millions of communities that are kind of interactive in a natively digital way. This is the first time this has ever happened. And so I think it transcends the idea of a city. It is a country, it is a network state, it's a community, but kind of on the internet, right? Which I think has never been done before. And I think as the world moves, this more and more digitization happens in the world, this kind of permanent plugging into it's like infrastructure for this natively digital world is now developing. And now you get to pick like, oh, what's my little spot here? Which country do I associate myself to? Which community where do I hang out, right? I think that is happening. And that's an insanely powerful concept, right? I mean, it has the gravity around it that I think most people in the world it's going to be hard to escape it. That's the ultimate, that's the insight, I think, to me, that's this inescapable reality of it.
So better join now.
Yeah, you know, if you're early,
Join now or get left behind.
Yeah, exactly. It's, you're going to do well.
Thank you so much, Anand, for this really
Thank you.
cool and insightful conversation.
Oh man, I appreciate it, and thanks again for the opportunity.
Nice.